Hey guys, so today I made $365 trading only one micro mini contract, and yeah, really insane sell-off as you can see right here. That's the trading setup, but before we go further into it, we want to start basically on the daily chart. So today was actually quite interesting. Why? Because before the opening we had a more bullish day, I would say. So we had a bullish body and we were trading to the upside. So not really indicating that we would sell off really huge today. Still, what we see, we have really clean buy sell liquidity right here. So we swapped daily buy sell liquidity daily buy sell liquidity twice, and also traded into the inversion fair gap right here. So that's also what we can basically be aware of, that we definitely have a resistance area right here. So dropping to a hourly chart, what I still have on is basically the price range right here from the low to high. So just measuring the quadrants, so upper quadrant, consequent encroachment, and the lower quadrant. And as you can see right here, we really sold off heavily today. With that, we can drop to a 50-minute chart. What we see right here is that we had really low volume, between, or basically within our sessions. So Asia, London, and New York open kill zone, really low volatility. And then basically with the opening, we just expanded and sold off lower. And why can we expect this? That's basically what we want to break down today. So first of all, we swapped daily buy sell liquidity right here only by the wick, and from there on already had difficulties to stay basically bullish to trade higher. We formed our high within our London session, or that's basically already indicating that we have a trending day, because we want to see that the London high or low stays intact in trending days. What else? Basically, we have really a low resistance and also really inefficient delivery right here. So therefore, we can expect that if we have low resistance to the left, we will have low resistance to the right as well. So trade it in low resistance higher, we will trade in low resistance lower. So therefore, it's reasonable. For example, right here we have high resistance, therefore we also have high resistance right here. And yeah, that's really like low quality fair gaps, so don't expect that we basically will reverse on higher time frame gaps right here. We don't want to extend such higher time frame fair gaps to the right. That's not what we want to trade in that case. So really important, something to learn. Before we drop lower, now I want to go to regular trading hours, and that's basically where we it's just amazing. So I really love to see that. What we have right here. As you remember, on Friday, we had a new ping range gap, basically right here to the downside with a 40 handled gap. Why? Because we are below 120. And we were really trading basically off the consequent encroachment level, and basically really failed to trade higher from there, continued our trend to the downside. We created right here with Monday equal lows, as you can see right here, and we had a new ping range gap to the downside of 106 handles and completely closed in the gap. Once we do that, we expect a only up day, and that's what we had yesterday. Only traded to the upside, seeking basically buy sell liquidity right here. Also the engineered buy sell liquidity right here. So engineered buy sell liquidity right here, liquidity right here. Basically we failed to trade higher from here. We swapped that and then traded into the gap, so the portion which was still basically untraded to. And now we did not only basically sweep daily buy sell liquidity right here, but as you can see with the opening, we once more push higher and basically trade above the wick right here, and from there on we sold off. So that's a short-term run on stops, that's manipulation higher. That's perfect what we want to see, and especially because then we also have a new open range gap to the upside, which we completely closed in. So that's just telling you that we will sell off. What we want to target is in that case Monday's new open range gap, so the quadrants right here, and also the equal lows. And that's basically what we had right here. So a regular trading hours market maker sell model, market maker sell off, how I called it. Yeah, completely traded through the gap right here, completely traded through the gap right here, only buy side delivery basically to the upside. Therefore we expect that we will have a sell side delivery in here to balance basically the region. That's why I want to see that we trade back to the quadrants. I basically labeled out right here, and we also swapped the buy sell liquidity, sell side liquidity, the equal lows I marked out down here. So now back to NQ. So how do we find a entry in there? So we are really heavily trading to the downside, and we want to be really careful. So I don't trade instant. So only trade basically after 9:45. Sometimes 9:40, but most of the time 9:45 with the 10 a.m. macro. So what I was already looking at is basically that we will not have a potential market maker buy model in here, even if we scrapped already New York Open Kill Zone sell liquidity, Asia liquidity, and sell liquidity, and obviously London lows. But that's just not what we expect. We don't expect that we trade higher, even if we have a hourly bullish fair gap in here. So we don't expect that we will find any support in here. We expect that we will still trade to the downside aligned with regular trading hours, that we will have a low resistance delivery, basically a sell-off to the downside. So what we want to see is basically that we have a short-term run and stops, that we do some damage to the buy side, and from there on we can follow the trend. So we don't want to really enter within a premium, so we have to be a bit more careful. If we look at like that, we definitely are below consequent encroachment, but in that case we don't expect that we will reach it. So we could also say that we want to see that we enter above consequent encroachment of the higher time frame gap right here. That could also be like a interesting level. But yeah, what I was really looking at is basically the fact that we right here failed to reach also the upper quadrant of the price range. So as you remembered, I measured from the low to the high price range. Right here is the upper quadrant. So back to the 1 minute chart. What we see is basically we reacted to it right here. Right here we failed to reach it, and therefore expect that we have basically, because we already also do have a inversion fair gap right here. But in that case, I want to see that that's basically manipulation, a CSD manipulation in that case. So we trade above it, but I don't want to take any longs in here. So yeah, back then I would always try to take longs in here, but that's basically the wrong approach. We want to see that we basically fail to trade above it and then use it as resistance higher. That's what we did right here. So the fair gap right here, that's not what we want to basically go long of. We want to see that we form a inverted fair gap, and more importantly, basically to confirm our setup idea, we want S&T, and that's what we got with ES, and then from there on we just sold off heavily. I entered already in here, so I don't need a retest. To me it's enough that we just trade aggressively through it. I entered and then perfectly closed it right here at the CE level of the Monday New Open Range gap. That's basically the perfect low resistance liquidity run. From there on we do trade lower, we do basically sweep also the sell liquidity, so the regular trading hours sell liquidity right here. Let's drop to a 50-minute chart. So right here, what's really small, get it, it's right here. So maybe let's do this a bit thicker that we can see it. So that's the sell liquidity. Back to electronic trading hours. Really thick now, but now you get it. So that's basically our external target we can hold to. With trading more contracts than one, I would be able to scale out a bit better, but with trading just one contract, because we have a relatively high risk in here, or not high risk, but just high volatility. So for the handle stop, it's a bit too much to me for 2 contracts, therefore only trade 1, and just hold for 183 handles. Just insane. So really insane sell-off in here. And we reached external sales liquidity, and now we just are basically consolidating. We don't want to trade anything in here, but that's basically it. So Really amazing trade. And right here you have SMT, not SMT, ES, so basically S&P. And what I want to basically talk about is the inversion fair gap right here. So I was not sure if I wanted to take the trade because ES was definitely a bit more bullish. So on ES right here, we scrapped only the liquidity and we were still holding strong. So we had not really broken any kind of structure because we still had basically the 50-minute gap right here. Or okay, that's a bit too low, but basically the suspension block of the hourly fair value gap, and in that case we scrapped basically the liquidity. So if you would basically draw it like that, we have a small volume imbalance, that's why we can take the whole range. That's the hourly fair value gap in that case. So therefore definitely in that case ES was looking more bullish. So also with the fact that we had a really clean inversion fair value gap, that we traded above it, that we traded above the high time frame gap. But still, I was really patient and I was really comparing with NQ. On NQ, I was definitely sure about the fact that we will sell off. On ES, it looked a bit more bullish, but therefore, yeah, we had a SMT basically to the upside right here. So a bullish SMT. And yeah, just on what we trade on NQ. So therefore, to me, the bearish SMT was really confirming my bearish bias. Really like that, just stop above the invalidation point, above the SMT high, swing high in that case, and then we just really sold off, and really amazing. So I think I really like the fact that we analyze it that way, especially with regular trading hours. So I think regular trading hours is like so underrated, so underrated, highly underrated in that case. So we scrapped buys liquidity, and just with the opening trading higher and just the short amount of stops right here, trading completely through the new range gap, that's already indicating that we will sell off. Also the fact that we did that basically the same on Monday just to the upside will indicate that we have upside delivery, downside delivery, and then therefore we can leave this range right here because the prices are balanced. So yeah, really clean, building up trend line size liquidity right here, probably trading still lower. And that's perfect. Also the fact that we have equal lows right here really confirms the bearish bias, and just yeah, a really amazing trade. 364 and 60 cents, so 365 US dollars, really insane. So with only one micro contract, that's that's huge. Yeah, that's basically it. I hope you liked it. I think that's basically one of my craziest trade I ever took. Also where I felt really confident in that I knew where we would trade to, because we had such a low resistance delivery to the downside. So nothing really to worry about. And yeah, I hope you liked it. Hope you liked the breakdown. Hope you learned something new. And I'm not sure how I will basically treat the rest of the week, because I'm now really up on the week. So maybe I will just stop trading for the week and we will start next week again. But yeah, really have to see, depends on delivery as always. And with that, see you soon.